In today's episode, and part of our Ask Tom clip series, we're going to take a look at a question and answer from one of our interviews conducted with one of the Clifton team last year. Without further ado, let's take a look.
I suppose, Anthony, on the topic of retirement, it's a subject a lot of people spend a lot of time dreaming about and planning in their heads, but often don't make that step and sit down with someone to plan how that might look for them. So I suppose, first off, any top tips for anyone out there that might be thinking of retirement and what they need to do?
Yeah, I suppose think about, our main coalface in this regard are business owners. And, well, I suppose if you think of retirement as a destination, then like any kind of journey, you've got to plan for it. And for business owners, of course, it's not just a sort of black and white scenario. If you're an employee working for a large company, you generally speaking have a retirement date, and you don't have to think too much about it in a way. Although I could argue that one. I think as a business owner, of course, there are many other considerations. I mean, first of all, yes, you've got your pension or pensions and your pension pot, and you need to make sure that they're organised appropriately in terms of the underlying investment strategy. But obviously, as a business owner, then if it's your intention to sell your business to coincide with your retirement, then of course that plan's got to take that process never happens as quickly as everyone thinks it's going to. Even those many business owners I've spoken to have said to me over the years, I've had an offer, I'm going to sell my business, should be done within 3 months. It's never done within 3 months. It's usually 6 months to a year, best case scenario, and there's many potholes along the way. If it's not a sale of the business, then it's a family business, then how is that going to work in reality? What does the succession plan look like? And there are sort of many legal, accountancy and tax issues that you need to take account of. And like I say, it's just one of these things that you kind of have to plot. And then coming back to the issue of pensions, it's a common mistake in a way, but a lot of people just think, well, this thing's called a pension, therefore I must draw on it when I get to retirement because that's the point of a pension. Well, that might be right, but it might not be right. So it might actually be more appropriate to think about using other assets as a source of income than your pension, just because of tax treatment, which I won't bore you with. But what I'm really trying to say is that this sort of stuff needs to be looked at holistically. And the way we do that is to adopt this process called cash flow modelling, where we take into account all of that individual's assets and from wherever they may be, and income and liabilities. And that, generally speaking, kind of helps inform people how best to draw from their various assets to support their lifestyle in retirement.